Alright guys, we're gonna have to tackle some very uncomfortable truths, but it's important and that's what you're coming to this YouTube channel for. So here's the deal guys, look, there's a lot that's super bullish in this market. I'm still in my long, whatever, nothing has changed from those perspectives. I'm still expecting the upside, but it is my job, and you and I would both be a fool if we didn't do this, to talk about where this could all go horribly wrong and things could just go completely tits up and we crash down. It's a British phrase. And so, what I want to cover with you here is the possibility of Bitcoin dropping down to $12,000, because there are a good list of reasons on this chart for why that might happen. And a lot of them, are things that we might not be considering as carefully as we should. The first one, and by far the biggest one that I want to talk to you guys about in today's video, is the possibility of a global financial crisis, a good old GFC. And what we had was back here in 2002 a 50% crash on the S&P 500. Back here in 2008 a 57% crash on the S&P 500. And the first thing that you need to understand about Bitcoin is that Bitcoin hasn't lived through something like this. Okay, if we go ahead and look at what happened during COVID, the worst crash that Bitcoin has ever seen with the S&P 500 since Bitcoin launched was this 35% drop, which happened inside of 50 days. So definitely a big drop, definitely a quick drop, but a far cry from these 50 and 57% drops. Keep in mind that when you drop, it's not the same thing as going up. Like, the difference between a 35% drop and a 50% drop is huge when it comes to the discussion of building back and reaching that high again. So this was very much a strange anomaly, black swan, the way it shocked the market super quickly and then the markets recovered up really quickly. And obviously Bitcoin did the same thing, right? Like, Bitcoin took 28 days to crash by 63% in the wake of this. And this is where we start relating it back to Bitcoin and talking about how fucked Bitcoin is if we see this kind of global financial crisis again. See, first of all, when we had something like this happen already with the S&P 500 right here, this is the S&P 500 chart when we dropped 35% in March of 2020, when the coronavirus crash was super, super scary. When we saw this happen, Bitcoin died. Okay, let's not beat around the bush. Let's not bullshit ourselves. Bitcoin fucking died, mate. It dropped down by 63% within 28 days. That's number one. Number two, that was only with a 35% drop. So number one, we know that Bitcoin suffers if the S&P 500 suffers. Number two, we know that the S&P 500 hasn't actually suffered that much since Bitcoin was invented. So the first argument I'm making with you guys here is that if you're one of the doomsday guys that are just constantly calling for, a huge global financial crisis and fucking 6 years of winter or whatever, I'm not going to comment on that, because first of all, I don't agree. I don't think that's going to happen. But second of all, I'm not smart enough nor experienced enough to be particularly qualified to speak about it. So I'm not even, I'm just saying, like, if you think that's the case, then you're gonna really get a chubby when you think about the fact that, the S&P 500 hasn't even, seen that level of crash since Bitcoin, existed. And, this is where it does get a little bit more scary, because, just a 35% crash resulted in 63% down for Bitcoin. If we see an even bigger crash for Bitcoin, for the S&P 500, that could very easily take us down to like 80%, and that's 80% down from current prices. And by the way, just to put that in perspective for you, what does 80% down from current prices actually mean? That puts us right down here, very conveniently actually, at $6,000. So we know that that's one of Bitcoin's best areas of support, but I also know that you're getting a pit in your stomach just by thinking about this. And as I go on in this video, you're going to start to realize that a lot of the reasons that Bitcoin has for potentially suffering massively with these big drops is because some of the downside potential wasn't fulfilled. We're doing okay, but we're not doing like crazy well when it comes to actually trending up, and I'll cover that with you guys in just a second as well. And of course, the major vulnerability, which is that, Bitcoin's success is very much dependent on, to be honest, the US economy and, just major indices around the world. And if they're not performing well, then we know that Bitcoin probably won't either. And it's for a pretty simple reason, like that we've covered many times on this YouTube channel. Quite simply, just to put it nice and straightforward for you guys, the main reason for that is because if these bigger markets are performing well, you're going to have investors having a little bit higher level of confidence, right? And when investors have a high level of confidence, they're willing to take a little bit more risk. So if you've already made your money in the very safe index, like, you know, S&P 500, then the money starts flooding into Bitcoin, right? Because you're ready to take a bit more risk. You feel greedy. You feel a little bit euphoric. You feel like anything you touch is going to make you money. Bitcoin makes you some money, so you roll it over into Ethereum. You know what I mean? Like that kind of thing that we've covered many times. And by the way, you know, if you're looking at any form of trading in these markets, you've got to be in the best places around. Otherwise, you're just setting yourself up for a disadvantage. And that's why I've got these beautiful links down here below for over $100,000 in bonuses when you sign up to these exchanges that I'm actually using. BingX allows you to trade all of these markets without KYC. That means no pictures of yourself or your ID. But even better than that is the fact that you can trade all of these stocks, forex, indices, commodities with leverage, with Bitcoin, and again, without KYC. So that is just absolutely crazy. You have so many options available. Like right now, crypto is a little bit more boring. Stocks are still tradable. The S&P 500 is open. Gold is still tradable. You know, like these kind of assets are worth considering trading during these kind of downtime moments in the market. And to have this much flexibility, BingX is quite uniquely positioned in the space right now. So they are well worth keeping an eye on and just getting set up, right? Like you want to have your money in the account ready to trade before you actually want to trade, because if it happens when you actually do want to trade, now you're potentially waiting hours or days to move your funds around, you know, which just isn't convenient. And Bybit, with the second link here, remains the best exchange in the space, without a doubt, in my opinion. They are going to give you up to $30,000 in free money. So that means, depending on what you deposit and trade with when you sign up using my link, you're going to get up to $30,000 in free trading ammunition. You can throw it anywhere you like, and any profits that you generate with that capital, those profits are yours to keep. So very compelling offer indeed. And if we do relate it back to the ideas we've been discussing here in the market now, you know, it is just the idea of like, look, if the S&P 500, for example, is going to have that big crash, whether it comes this year or next year or whatever the case may be, you know, in 2, 3 years, 20 years, you know, the overwhelming likelihood with the current state of affairs for Bitcoin and how it relates to the rest of the world is that we're probably going to see a big Bitcoin crash. And, you know, honestly, I think the kind of people that ignore this are just quite foolish, quite dangerous to listen to, if I'm honest with you. I'm only taking a realistic approach, looking at previous data and applying some common sense. We know that if everyone starts fucking losing their jobs and stocks are crashing and companies are closing down and so on and so forth, then obviously there's going to be less money that wants to be risky, you know, and that's what Bitcoin is. Bitcoin isn't the safe haven for people that love the technology and love that it's mathematically proven and all this other stuff, because most people don't even fucking know about that to start with. But if they do, they certainly don't care. They just want to get rich. And if things feel scary and you know that Bitcoin is a very risky asset and your goal is to get rich, then you're certainly not going to be open to the possibility of losing money with these very speculative markets here. So that's the first major reason that I wanted to discuss with you, the idea of Bitcoin dropping down to levels like $12,000 or even lower. The next one is a little bit easier to digest, and it's also not something I'm as worried about, and it is this ascending channel. Now, ascending channels are just bearish. These are bearish channels. These are, you know, the classic thing that happens before the trend actually breaks down. And there are a million examples of this I can give you. I've actually already drawn out the opposite of this, which is a descending wedge. Now, whether it's a channel which, you know, is parallel a little bit like this, or if it's a wedge where the lines kind of, you know, come closer, you can see the lines are coming closer and eventually they would meet and, you know, what's called converge. You know, it doesn't really matter. What we're actually looking at is, in an uptrend, we slowly trend down. This is your prime example of a correction that's going to break up, and that's why I was so fucking sure about it on this YouTube channel. Do me a favor and smash up those likes if you found all of that analysis useful, because I know that a lot of people were getting shaken out by things that, quite frankly, you should have known better about. You know, but if you are watching this channel, there's no way you would have fallen for that trap, because we saw it coming from right at the top. And yeah, I mean, I'm kind of annoyed that it took so long, but you know, the time it takes isn't in my control. But I certainly can tell you that you know, we were expecting this bounce off the 25k level. We were expecting this correction, and this is the thing, is that these are patterns that play out whether we're trending up or down. You know, if we're trending downward, the patterns are just reversed. Over here, we're trending down, and look at what we form right here, a nice kind of ascending channel right here, which is the same thing as the wedge, you know, which just very clearly indicates to us that we are trending down and getting ready to break down again. So on this occasion, we didn't quite break down, you know, it took us a bit longer, but we did end up continuing the downtrend from this pattern here. And this is just the normal body language of a trend, right? I mean, you know, if you look at Any downtrend, you're going to expect the movement, and then you're going to expect a bit of a fight, and then you're going to expect the real trend continuing, and then a bit of a fight, returning back to the same level that we found support at. Now we're finding resistance here, and then we continue trending down. That's just how the market forms, that kind of classic staircase pattern that you're used to. You know, so we've seen this a million times. You know, sometimes these patterns can be a lot bigger. Here is more of a wedge where the two lines kind of meet. We're in a downtrend. You know, we're fighting that trend, and bam, we end up dropping down. Yeah, so I don't need to talk too much more about this and why these are bearish patterns. I think it's abundantly clear that we're in the same kind of thing right now, but at the very same time, it also doesn't have to be the end of the world. You know, these are typically going to be quite bearish patterns. Yes, I agree. But we've actually traded these patterns many times before. I've actually taken longs based off this pattern exclusively, like this long right here, this kind of rising channel here. You know, I entered a huge, it might not have been this one, it might have been like this one here, I don't know. There were quite a lot. You know, Bitcoin has a pretty good track record of breaking out of these, you know, and this is the kind of caveat to that analysis, is that in traditional finance, this pattern within an uptrend is a major sign of the market topping out. It is a very clear sign that the market might be in a lot of trouble. But you know, if you've been watching me over the years, you've heard me say this a million times. You know, this is just one of the patterns which Bitcoin just kind of shrugs off, doesn't really care about, and then skyrockets up from there. So, you know, I mean, there are examples where this has gone really well, and there are examples where this has gone really badly. So, you know, here is another example where we've got somewhat similar kind of price action right here, and it didn't go very well. Here's another one where it didn't go very well at all. You know, so there's a very, very good list of you know, kind of examples I can give you where it did result in tops, and that's basically what we're looking at right now, whether it happened at the top of the market or whether it, you know, kind of just continued the current trend. And then there's so many, potentially even more examples of it working out pretty well for Bitcoin. This one's obviously a little bit harder to draw, but you can kind of understand what I'm getting at here. So, you know, that's potentially like the reason that I'm not too worried about it, is just the fact that we've done this so many times, and it just typically hasn't been such a big deal for Bitcoin. You know, the way that I actually interpret these patterns a lot of the time is simply that the market is just, it just has a really bullish body language. You know, I mean, if you're not even really giving the market a chance to reset on a very large time frame, which, you know, according to this chart, it kind of starts to look like that, then, you know, there's two readings you can make. Number one, this is an unsustainable trend, and number two, this is an incredibly strong trend, a trend that cannot be stopped. And you know, I'm not here to change your mind or anything like that. I'm just kind of presenting the information to you as I see it, and then you can make your own decisions. For me, you know, I'm probably leaning towards this being slightly stronger, but you know, it's hard to say, because the way this looks right now, we could top out at like 38k this month. We could top out at like 38k here in July, and that would be enough, you know, and the market would still be fulfilling this ascending channel if we fall out of it and start correcting down. And this is, you know, kind of where we start dialing up the heat a little bit. So this chart that I'm showing you right now is the inverted Bitcoin chart, right? So you've got the standard Bitcoin chart, which looks like this, you know, and then if we just kind of, what am I doing here? If we just kind of invert this right here by typing in 1 minus and then BLX, you know, we can start to see the opposite chart right here. And this is pretty useful just to make sure that we are you know, removing any bias that we have in the market. You know, it basically flips everything on a mirror. You know, the low right here is 69k, this high was 15k, so you can start to get your bearings of what we're looking at now. You know, and the idea behind this analysis right here on this chart is that, you know, we've got this huge area of resistance right here, which sits at $12,000, and you know, we bounced, we got rejected just shy of it. You know, we probably could have come all the way up to this resistance area, and that's where we start to have the argument of, well, you know, did Bitcoin actually fully correct? You know, and there's a good discussion to be had that, you know, perhaps we didn't. The reason I'm saying perhaps we didn't is it actually ties in with my next reason for why we could be looking at a major crash for Bitcoin, which is that, you know, we just haven't had that deep of a crash compared to what we've seen historically. Historically, we're getting crashes that kind of bottom out in the kind of like 80%, like minus 80%, minus 85% range. This one was not that bad. Still a very, very deep correction, right? I mean, from, I don't know if it will actually display properly if I measure it like this, but let me give it a try anyway. So I'm just going to measure it from here to here. This was a 77% drop, so you know, quite a substantial, you know, drop that we had in the market, but not the 80% that we've seen previously. And this chart is just one way to visualize it. You know, if we drop below the 786 Fibonacci line, last time we fell 30% below it. This time, oh my bad, we actually this time we fell nowhere near 30% below it, and actually falling 30% below our 786 fib line puts us at 12k, and that's exactly what this chart is showing as well, is that this resistance level sits at 12k. So I'm sorry, I haven't been showing you the chart that whole time, my bad. Yeah, so we're talking about this resistance area right here, you know, and this Fibonacci level right here, you know, these 786 retracements. I promise you I will get better at this. It just slips my mind sometimes, but it's fine. You had to look at my pretty face instead. The 786 retracement right here, minus 29%, that's where we bottom out. So 29% below this level, that's where we bottom out. And in this occasion here, that would put us at 12k. So this is where we're starting to build some confluence, right? We've got multiple different signs that are unrelated, even taking a fresh perspective on the market, all pointing toward the same conclusion, which is that a 12k Bitcoin to bottom out might make some sense here. So that is a lot. That kind of tells us that, you know, we're not doing particularly well, that we could be ready for a bit of a correction. It's not really something to be scared of. You know, I think the first big thing I'll say is that you know, it would be enough if we fell down to 12k, I think. You know, we wouldn't need to go substantially lower, and you know, if you're fishing for like 9k or 9.8 or whatever to buy, then you know, that could, I think, put a lot of people in trouble, because you start, you know, missing the actual opportunity because you really want to time, you want to get the pixel perfect kind of entry, which you know, it is just a futile effort in my opinion. I mean, you know, you're better off just making sure you're in the market, in my experience, you know. But obviously everybody, pardon me, everybody is going to have their own trading style, so you know, this is going to vary from people to people, from person to person. But yeah, what I can say with certainly a high degree of confidence here is that you know, I mean, if this thing does drop down to 12, that doesn't have to be the doom and gloom that I think a lot of people would expect it to be. And I want to round this off by, you know, just kind of asserting again very, very clearly, because I know that some people are just going to completely miss the fucking point. You know, this is not me saying that I think this market is going to crash and go down to 12k at all. I still don't think that that's, you know, the more likely scenario here. I don't really know. You know, obviously everybody asked me this question. What I can tell you is I think that we have a pretty good chance of ending up here, whether we do it like this, you know, or we just go straight there. I don't know. Whether it looks more like this, you know, I don't know. But I think that we will end up here. And, you know, my most likely situation is that this would be a massive deviation and we'll come back down, you know, and then probably just kind of correct until the halving, you know, which is probably going to happen around here. And then we do something like this. It has the right balance between being fun, being shit, being slow, being realistic, you know, and also screwing a lot of people. So, you know, I'm just trying to be realistic here. Obviously, I'm saying this all with a very emotionally detached perspective, you know, because you kind of have to be as a trader. But obviously, you know, that it wouldn't be the nicest thing to happen, but you know, that's Bitcoin at the end of the day. So I certainly think that we get up here. I think this is where, you know, I mean, we're already starting to see with a long and short ratio. There's, you know, a four-slice dashboard here. There's still, you know, a lot of people going long with Binance retail traders and so on. And all of these top traders have been long since like 20k. So if I'm not mistaken, I might be mistaken on that, but since a while. So you know, eventually these long positions have got to close, and you know, the only way you close a long is by going short. So you know, that's probably going to crash the market a little bit as well. So you know, there is a lot to unpack here. You know, there's a lot that could go wrong if Bitcoin gets into this 30k range. I think that this is finally where all of the naysayers here, and there are a lot of naysayers, I think this is finally where all of the naysayers are gonna you know, finally start believing and buying in at the top, and then you know, obviously top traders kind of flip and start going short. It's just one of those things that it almost looks like it's pre-written to me right now. So that's still what I'm expecting. You know, whether this drop takes us down to 20k or fucking 25 or 28, I have no idea, and I'm not even going to try and answer that question. But you know, that is what I feel a little bit more certain of. So you know, a lot of this video is a thought experiment, and it's acknowledging the very real risks, which, like, despite how much I think that, you know, this stuff is going to happen, if the S&P 500 does start kind of producing the same kind of crashes that it's done before, it's fucking lights out, mate. You know, like, I don't see anything happening for Bitcoin that can be bullish at that stage, that is going to be incredibly hard to recover from, I would say. Just in my perspective, from everything I've seen, Bitcoin is going to have a real tough run, kind of sustaining itself if the S&P 500 sees a crash which is bigger than this COVID one, and considering that a lot of people think it's due, that could be something to keep in mind. And again, just in case I haven't made myself clear enough at the beginning, I don't think it's coming. I think that the markets are doing pretty well. I think that, yes, we probably have just kind of staved off the crisis and kicked the can further down the road. But I think the final point that I'm going to leave you here, other than reminding you to check out the beautiful offers available to you with the links in the description, no KYC in traditional finance markets right here, and up to 30K in free trading ammunition. All the profits you generate from that are yours. The final note that I'm going to leave you with is that I can tell you a long list of names of people that are just forever fucking negative, and whatever. I can totally understand why you'd be that way. I've had extensive conversations with these people, and they're right in a lot of the case as well. But my ultimate point to them is, look, you've sat here speculating on this subject for an incredibly long period of time, passing up every opportunity that comes your way because you think this big crisis is coming. It hasn't come yet, and meanwhile, I've been aware of that risk. I agree with you, and I acknowledge that risk, but I've stayed focused on the present, and that's why I've made way more money than those people. So, reality is kind of a bitch like that. Like, ultimately, even if you're right, it's not really about being right. It's just about positioning your capital in the market. And if this fear mongering that you're doing with yourself or with other people, even if it's not fear mongering and you're just being realistic, exactly what I mean anyway, if that kind of thing is presenting you from taking opportunities that are available now, then great, I guess. More cake on the table for me. But obviously, if you're more interested in look, because the ultimate goal is you want to make money right now and be prepared for when the thing actually happens. Because if we're all going to get fucked, let's say we all lose 50% of our money, I want to lose 50% of 10 million as opposed to 50% of 10K. So I'm going to run my account balance up as much as possible, and I'm going to stay very, very overtly aware, like very, very specifically aware of the risks, and I'm also going to have an action plan in place for if these risks actually materialize. But in the meantime, I'm still trying to make money. And that is a perspective which, like, I'm saying it to you right now, and I know it sounds super obvious, but a lot of people don't live that way. They don't actually, like, their actions don't actually back that up. So anyway, if you guys want to see how I'm trying to pull it off, here are the steps on screen. You can jump inside of 𝗬𝗢𝗙𝗜𝗔𝗟 VIP by following these little clicks on screen. Send me a direct message to get yourself inside, and of course, one final time, over $100,000 in bonuses available to you with the links down below. OKX as well, giving you up to 60K in rewards. Absolutely fucking crazy. No words, to be honest. So check them all out. Thank you all so much, and I'll see you all in the next one. Cheers.